If you want to maximize future growth at your bank, at your credit union, at your fintech, you need two things. The first is a growth mindset, and the second is skill set. That's why I look forward to sharing with you how you can level up both your mindset as well as your skill set so that you can continue to maximize future growth at your bank, credit union, or fintech on today's episode of the Banking on Digital Growth podcast.
You're listening to the Banking on Digital Growth podcast.
Welcome back to another episode of the Banking on Digital Growth podcast. I'm James Robert Lay, founder and CEO of the Digital Growth Institute, where we are on a mission to help financial brands stop losing loans and deposits by guiding them through the Banking on Digital Growth program. Today's episode is part of the Practical Perspective series. And before we get into today's Practical Perspective, I want to invite you to grab a copy of my #1 best-selling book, my new book, Banking on Change. Not only can you get a copy for yourself and your team when you visit www.bankingonchange.com, you'll also be able to grab a couple of extra bonuses that will further guide you and your team through the complexity of change as we're moving further into the age of AI. Now, as I mentioned to open up this podcast, if you want to maximize future growth at your bank, at your credit union, or fintech, you're going to need two things. The first, once again, is a growth mindset, and the second is, of course, skill set. And these mindset and skill set upgrades involved shifting from a purely reactive service approach that a lot of financial brands find themselves at operating around even today to a more proactive, a value-based one. And it's about understanding the needs of members, of account holders in the ever-evolving world of financial services. And as we're moving into the age of AI, I predict that we will see more evolution within the world of financial services, but at a much more rapid pace. That's why on today's episode of the podcast, I look forward to sharing practical perspectives with you from a panel discussion that I facilitated at the CuneXus Symposium. In this panel discussion, you're going to learn proven strategies that you can apply yourself from a panel of growth-minded leaders who are all committed to helping their teams unlock new growth. And when they help their teams unlock new growth, they help their members and account holders unlock new growth as well. So let's go ahead and dive into today's panel discussion so that you can keep moving forward, making progress along your journey of growth at your bank, at your credit union, or at your fintech.
Starting every conversation with what's been going well, we could easily dive into all of the challenges and the roadblocks that we're each experiencing today, but we're not going to do that. We're going to ensure that we cultivate success by starting off on a positive perspective. And I'd like to start with you, Joanna. What's been going well? Because when we connected before, you shared with me that loan growth has actually been better than expected.
Yes. So, I know, as I think all of us are kind of facing, we want to get more deposits in, so that's a factor, but we're still able to lend to our members, and we're finding really good loan growth. Especially, one of the avenues is our indirect channel. We've added 30 new indirect partners this year, so we're seeing a lot of good growth there. But also in home equity lending as well.
You also mentioned the fact of loyalty,
Yes.
which is what we were talking about yesterday. Loyalty, trust, and it goes hand in hand together. Where is loyalty rooted for you?
Yeah, absolutely. I think, as you mentioned, it's meeting members where they are and being there when they need you. So even though rates have been increasing, our members know that we're providing really good value to them, and we're going to keep offering competitive rates, even though rates are definitely higher than they were a year ago. Still providing that value and excellent service to them, and knowing that we're there for them.
You're not the only one who's experienced this idea of positive loan growth. Steve, you've also seen a lot of demand as well, particularly on the HELOC side. What's the story there?
Yeah, we've been pretty busy across the board with lending, but definitely home equity. We've seen a big spike in home equity loans. I'm sure you've all experienced that as well. So really just trying to hone in on that product and make sure we're bringing the best product to market, obviously, for our members, and really making sure that we can have some type of a differentiator there, because ultimately everybody, there isn't a lot special to the home equity, right? So how can we make a differentiator, bring that to market, and and bring something different and new, maybe that our members aren't seeing from someone else.
What are you doing? I mean, you talk about this idea of differentiation. How exactly are you making things different and new with HELOCs?
Yeah, if anybody out there has a great idea, I'll be available tonight after dinner. You could come and let me know. No, just playing a little bit around with variable to fixed, and then ultimately just different opportunities to lock it in one time, or different things with rate, essentially.
Testing, learning, refining, growing. Very good.
Exactly.
We've started off on a positive perspective of loan growth, even in a market where deposits are a hot topic. Emily, though, has a different story. You actually were encouraged and praised for not hitting your goals this year.
So it's been a very different environment, especially for lenders. It doesn't feel right for us to withdraw from that aggressive lending market because of this balance that we have to consider on the deposit side. But so I shared with the team that it's probably the first time in my career that I've gotten a catagirl for not making their loan goals. And it's like, where are we? What world do we live in? But one of the things from your conversation yesterday struck me. Our members still have that need, and if we're shying away from the products that they need, and we're directing them in another way, such as deposits or something that is more business minded, we're not serving our members in the ultimate way. So that's a takeaway that I'm going back to my organization with is regardless of the environment that we're in, we still have to serve our members with the products that they are obviously proving to us that they still need.
Absolutely. And we're going to stay on this theme of growth, but from a different perspective. Imelda, you've made some acquisitions.
Yes. The last 2 years have been very busy for Arizona Financial. We actually acquired 2 community banks in the last 2 years, and we're able to now offer business banking options, commercial lending options, a more robust residential program. And small business is huge in Arizona. So that's exciting for us because we are now able to go out to the community and say we serve small businesses. We can lend to those startup businesses. So that's big, and it's an exciting time for us. But those 2 years of being in that acquisition mode, we lost a lot of traction on our consumer side. So that's where I'm here today, and I'm just like gobbling it all up and thinking like, okay, now it's going back to work to how do we make a better experience for our consumer members that then leans into our business and our residential. Because those business members may come to us for a business, but then they have a consumer need as well. So I think it's about tying those 3 business lines together and making sure that we're able to serve them with all their needs, not just the initial request.
As we're going through, if you're hearing something from the panel that you'd like to have them go a little bit deeper, do not be afraid to raise your hand, or even better, just stand up, speak up.
Just shout it out.
Yeah.
Just shout it out, stand up, speak up, so we can see where you are and invite you into this conversation. I think one of the things I'm hearing, and I want to get your take on this, Janelle, and maybe from everyone here, who feels like sometimes you wait for the perfect time to do something, the perfect time to launch something? Who feels that way sometimes? Like, we got to have it perfect before we can do it, okay? Janelle, you shared something that is a little bit different because we're moving at a pace that we have never experienced before.
We are. And at Commonwealth, we're known for, let's get it perfect, and it doesn't matter how long it takes. And you miss things. You miss the opportunities with that. So we're really trying to get comfortable with a violently executed plan. It's far better than one with everything perfectly planned out, to make sure that we hit it right at the right moment and get those opportunities before they pass us by.
How is that transforming maybe mindsets for yourself, the team, the organization, because it is a different way of not just doing, but also thinking?
Yeah, I mean, I think it's really getting comfortable with failing forward. That didn't go as planned. All right, how do we fix it? How do we move on? And how do we make it better next time? So just being comfortable with that grace mentality that it's okay. The recovery is important, and then we move on and we try again next time.
This idea of failing forward, there's some leadership involved because we're leading beyond where we're at right here in the present. Christopher, you talked about, it's easy to be a leader when times are good. Now is the time to really step up and not just manage, but really provide that leadership and vision.
Well, absolutely. When everything's going swimmingly well, we're all great leaders, right? It's when you see that conflict potentially to say, okay, how do we rethink it?
Yes.
Doing things a little bit differently or rethinking that through problem-solving, critical thinking. And by all means, as leaders, reaching out to your counterparts, whether within your network here, professionals, that's the greatest information or advice I can ever give is really dive deep into your network of individuals and then as well as your employees. Because guess what? Your frontline staff probably know it better than you do and can give you some great ideas as to, okay, how do we overcome that obstacle?
That's a fantastic point. The idea of community leads to collaboration, it leads to accountability, it leads to a cross-pollination of ideas. This is why when we come together for something like this, it really is truly transformative. And I want to come back to this point of mindset for just a bit, because when things get tough, when things get hard, that's when we have to make some choices. One of my favorite exercises when working with financial brand leaders is to surface roadblocks, to surface obstacles really early and often before we experience them. Think about how often, and just show of hands, you do goal setting annually. Yes? Raise your hand. If you do goal setting annually, raise your hand. Okay? Do you do goal setting quarterly? Raise your hand. Quarterly goals? Monthly goals? Weekly goals? Daily goals? Got one over here. Okay? One in the back, looks like. The to-do list.
It's like survival. Does survival count?
So that's a fantastic point. Here's the thing. Has anyone ever you've done your goals, but right after you think through your goals, what are the roadblocks that stand in the way to prevent me from moving progress towards? Who thinks through the roadblocks, or do you just think about goals? So show of hands. I just think about goals first. I only think about goals. Who thinks about roadblocks too? Fantastic. Because the more that we can surface roadblocks early and often, the more that we can identify them. I think there's a really good exercise here, because you can also learn from the roadblocks of what others are really seeing and thinking about right here. Imelda, one of the things that you talked about when we connected ahead of time was the world is changing. We're not having these face-to-face conversations anymore. Why is that a potential roadblock that we need to be thinking about how to overcome?
Yeah, no, pre-COVID, members were coming into a branch. We just had more interaction. During COVID, they found a different way to do business, and those members aren't coming back to see us in our branches. So they're moving more to a digital environment. So for me, our roadblock is how do we nurture those relationships that, for me in lending, start with a loan. We see that all the time. They come to the website, they like our rate, they apply for an auto loan, and that's where it ends. We open an account and they're an auto loan member. So for us, it's about how do we utilize the tools and resources that we have with our partners, and again, with reaching out to your counterparts, and what are you doing to onboard your new members? What are you using to onboard your new members? But I think it's existing members. We have a lot that just have an auto loan with us or may just have a checking account. They're sharing us with someone else. So it's really about how do we utilize digital technology to help them not share and be just with us.
That's a fantastic point. It's transforming the relationship from being what has historically been, I would say, passive, maybe even reactive. We wait for someone to raise their hand. And Janelle, you shared with me that it might be a service mentality. Why is a service mentality a roadblock that we need to think about? And why can't we forget that we're not in a service environment anymore?
Yeah, I think COVID changed things. There's the pre-COVID world where we were all used to the way things were, and then there's this post-COVID world where we're trying to get back to this pre-world, but we really liked that kind of COVID period.
Real fast, Who wants to go back to the world before COVID? Raise your hand. Who wants to go back?
It's impossible.
It's impossible.
Yeah.
It's
Got to move
impossible.
forward. Got to move forward. There's no looking back.
Yeah.
Right.
Yeah.
Yeah.
Yeah. Exactly.
Right.
And so I'm going to come back to you in just a second. When you talk about this idea of pre-COVID, post-COVID.
I mean, for us, you know, team members in the branch environment, their jobs looked different during COVID. So, you know, one thing that we are kind of struggling with at times is to remind people we are in a service environment. That means that we have to be available on Saturdays. You know, we have to be available when our members need to do business. And that seems like it's changed since COVID. It's different than it was before. And it's not as natural because I think COVID, people looked at things differently. We talked, I think, when we talked before, you know, work-life balance looked different pre-COVID and post-COVID. Expectations from people are different in a post-COVID world. They hold their time more sacred than they did before. So as an organization, as a business, how do we balance the need of the employees and the need of our members and the needs of the organization? So that's kind of a challenge that we didn't have to this degree, it didn't feel like in the pre-COVID world.
If you recall yesterday, one of the things I shared was the formulaic approach to growth, because you're talking about employees here. EX plus HX multiplied by DX is the path towards growth, meaning a positive employee experience when combined with a positive human experience can then be multiplied by a positive digital experience. And I think as leaders, Chris, as you were saying, this is our opportunity to lead others who might not have that clarity that we have as a leader beyond some of the confusion here in the present day. And Steve, your roadblock that you shared that I'd like you to expand upon is something that Emily was sharing earlier too, is just some of the things that they've been seeing as a positive, but this liquidity challenge, the need to keep lending in otherwise turbulent times.
Yeah, I don't think I'm the only one in the room with liquidity issues, except the Florida credit unions. Apparently, I've networked with the Florida credit unions all week, and they're all at 60% loan to share, it appears. So meet up with Florida credit unions while you're here. But yeah, no. As a lending guy, you know, lending is the economic engine of your credit union. It's extremely important. Maybe only more important than that is, you know, as we saw a stat yesterday, there's 35 million members in CuneXus that need loans. They have lending needs, so we need to be able to continue lending. And so liquidity is, you know, wherever I go, and I'm sure you as well, you hear, that's the biggest concern for credit unions right now is liquidity. How can we continue to lend? And as a chief revenue officer, one of the things that I'm facing is, you know, when I have a limited dollars to lend and I have a mortgage department, a consumer lending department, a commercial lending department, where do we spend that dollar? So really looking at profitability and deciding who gets that $1 I have to lend out. So that's a real obstacle for us today.
Well, when you're talking about these Florida credit unions, what's going on down in Florida, Joanna? Because that was one of the roadblocks that you shared with me is around deposits and the need to grow deposits, but we got to get the good people through and separate the wheat from the chaff.
Yeah, so what we've been really focused on refining and building our digital account opening space and making it really frictionless area for people to join our credit union, which has been pretty good. But one of the things we've seen is an increase in fraud, which I don't think is unique to us. So it's finding that balance of making it frictionless for the good people to get through, but we're trying to find those right controls so that we don't have too much fraud coming through. So that's one of our areas of focus right now.
What are you doing specifically to help mitigate some of that, but still get the good people through?
It's really trial and error. So we're partnering with, I believe it's Array is the company that we're working with to have a few different fraud tools and really see what works. And I'm not directly as involved in that as some of the other members of our team, but my understanding is it's plug and play, so we can really test different tools and see what works. But I think, again, you know, some of the feedback we've gotten from real people trying to get in the door is we might have tightened it too much. So, like, some people are getting rejected and will need to go into the branch, and we don't want that. So it's really finding the right balance.
Absolutely. And when you talk about finding the right balance, I know, Emily, balance is key but it's also a roadblock that you're thinking through right now, particularly when it comes to digital banking expansion. What's going on here? Because you're looking at new growth opportunities, but those opportunities are also presenting some challenges.
They present challenges because as you expand your digital presence, you also have to keep relevance in that and to your brand. And outside of our charter area, typically, we have to recreate our presence in that space. So that becomes a challenge of making sure that we're promoting ourselves as aggressively as we need to. We kind of get comfortable in our area that knows us and knows what we represent and knows our brand. But we have to remember that as we move outside of that space, we've got to continue to build our relevance and continue to make our processes much more streamlined, efficient, like Joanna said, and ask ourselves a lot of questions of, do we continue to do it that way just because that's how it's always been done? Force ourselves outside of the box. That's what I meant by the lessons that we learned during COVID. Is out of necessity, we had to ask ourselves a lot of questions, completely do a paradigm shift in our mindset. And now that we've learned we can, don't go back. Manage your remote workforces. Allow your teams to have that work-life balance that they learned they could have, and you don't take that away. That's that human connection for your employees as well as for your members.
It would be a very interesting experience to almost force a COVID-like situation at least once a year, if not once every 18 to 24 months. It's an exercise in limiting constraints, because when you take things away, that's when you're starting to see what is important, what the challenges are, what the opportunities are on the other side. Because as you're talking about relevancy, Christopher, one of the things that you're thinking about from a roadblock is we talked about this yesterday, and Barron even touched on this in his opening thoughts. It's transforming competition in conjunction with transforming consumer behavior. Why is this a roadblock in your mind to be thinking about right now?
Well, I think, from a consumer standpoint, everybody's been comfortable with super low rates for how long, right? We've seen a market that for 5 years, rates never moved up. So the consumer behavior is like, what do you mean I'm going to now have an auto loan that's double what it was maybe 3 years ago? So when you look at consumer constraints of, I can't afford that payment.
That's expectations too.
Right, absolutely. So you're seeing that even with competition. In competition, there is no such thing as a 3% auto rate anymore. Not that I'm aware of anyway, but if anybody has one, let me know.
Let me know.
Yeah, let everybody know, right?
Let everybody know, yeah.
But with that is making sure, and I think it was to Steve's point earlier, is making the right balances. Now, as the Chief Lending Officer himself, something that we did a little differently in our organization is I have several goals. It's not just lending anymore. It's also membership growth, indirect growth. So we're looking at how do we do that, and now I'm in charge of the profitability with our ELCO team, is looking at these rates and saying, what can we do? Because when you have constraints to the liquidity aspect, not being a Florida credit union, you've got to look at, while I still need to lend that money and help my members, how can I maintain that return for the credit union and still maintain profitability? So those are some of the, I wouldn't say roadblocks, but challenges we face as an organization, and just rethinking that mindset to say, how do we still do it and do it well, both from a digital standpoint as well as profitability, maintaining that. Because if you shut down your loan pipeline, trying to get that back, it's near impossible. And we saw that exercise, or that true testament, when we did the same thing several years ago with deposits. We had deposits just coming in flush with COVID and the stimulus. We didn't market for deposits. We forgot about it. And that was a mistake, lessons learned, that we shouldn't do again.
That's a fantastic point. When you shut down the pipe, it takes forever to get it back up and running. And it's one of those things that, while it's what I was talking about yesterday, at the foundation of every relationship, respect. Help me when I have a need, not when you have a need. And of course, we all have needs up here, but if we're thinking about growth as a result by creating value for someone else, it's always focused on how we can help them. Joe Polish is an entrepreneur, and he wrote a fantastic book recently called What's in It for Them? And it's a little bit of just a different way about thinking through the next steps forward as we're looking to cultivate success. We've heard from the panel here with some roadblocks. before we move on to opportunities, questions from y'all, Baron, from y'all, on roadblocks that they're discussing. Something that you would like to go deeper into, whether it's liquidity, relevancy, keeping the pipeline going. Stand up, and you know what I'm going to do? I'm just going to pause. I'm going to wait for someone to ask a question. Have courage, stand up, speak out, shout out with the question because this is a conversation. Who wants to be the first one before? And if that doesn't work, I'll do what I do in my university. I'll volunteer you. There we go.
Yeah, all right.
We got a mic runner.
From a brand perspective, we talked about the branches, kind of not becoming irrelevant, but not being as popular as they were before. What have you done from a website retooling or rebranding of your logo? Because I've had a couple customers that have gone down that road of completely rebranding. Is that something that's on your mind or that you're talking about from a website perspective?
Who's built the website in the last maybe year or two?
We're in the process of conversion now.
So you're in the process so we're going to come process of conversion right here. Let's go ahead and start with you. What's the process like?
Well, we are moving to BI, NCR's BI product for both our mobile and our online. We haven't launched yet, launching in August, but the exciting part about that is just what you were saying, Emily, is it allows us to refresh. And I shared with the team when we were talking earlier, this is the opportunity we have right now, is to take this time to look at how we're delivering our products to our members in that digital space, and is that the best way? Is it attractive? Does it have the message that we want to send? So yeah, I think that's definitely something that we've adopted and we've worked on.
That's a fantastic point. We have two website builds here.
Yeah, we're in the process right now too, and I would sum it up and say simple, fun, and personalization. Just we look at like our mortgage page and we're like, do we really need to have 20 products listed there? Or does it just need to be, 3? Doesn't mean we don't offer 20, but do we need to list all of them on the website? Make it simple, have some personalization. So we're in the process right now.
I want to touch on that point when you talk about simplicity. It was Henry David Thoreau who wrote long time ago. He said, "Simplify, simplify, simplify." And I think as people, we tend to make things way more complex than they need to be. And when you're talking about products within financial services, there are different product line owners, and they want to have all of their knowledge, all of the information right on the website. But it's the curse of knowledge. It's like if we give everyone everything up front, then it's overwhelming. Great analogy. Who's been to the Cheesecake Factory?
Oh, it takes forever to order anything.
It's
too much.
You get the freaking Bible of food.
If you're indecisive like me, it takes very long for me to get there.
Yes, and so
it's a book.
It's a book. My wife and I remember when we were dating. When my wife and I were dating, we went to the Cheesecake Factory, and they literally, over the music and all the background noise, you literally heard an audible thud when it got dropped on the table. And I was like, so we opened it up. We got to the point where I was like, you know what we're going to do? We're going to open it up. We're going to put our finger on the page, and that's what we're going to get. Now compare that to, say, like a Five Guys or Chick-fil-A. And even Chick-fil-A, it's interesting how they frame their entire experience. They don't call it fast food. They call it quick service. And so it's the simplification because it's not the paradox of choice, which, by the way, if you want to dive deeper into the subject matter, there's a fantastic book and a TED Talk on the subject. Essentially, the more choices that we're presented with, the more information even sometimes when you're talking about all of this data, the less likely we are to make a choice because of indecisiveness. What's your experience here?
So we did go through a rebrand as part of our the last 2 years, and what we've done with our website is remove the clutter. That's what we've done. We've really just maximized each page to really speak to our member. but also give them ways to connect, because they still need to connect with us. So we've added, our mortgage loan officers on there. How do we set up an appointment with them? We have a system where they can set up an appointment. We've added virtual appointments to our website. So just giving them more options on how to connect. And again, to Steve's point, get rid of the clutter, make it easy for them to access. One of the things that we went through is marketing met with each business owner and said, okay, let's click through our website. And one of the things we realized is it takes me 5 clicks to get to this one product. Members are going to, customers are going to leave before they get to the information they need. So how do we get that down to 2 clicks? So really thinking about the time spent on the website.
When you're talking about relativity, and you're talking about websites here, one strategy that can be deployed uses behavioral psychology. It's known as anchoring and adjusting, to where you are bringing third-party rates onto your product page to anchor it against. And there are other financial brands who are doing this right now. For example, Ally Bank. If you go to Ally Bank's website, Discover does this as well. When you're going to their websites, they're bringing the rates of, say, a B of A, a Chase, a Wells Fargo, and they're positioning their rate against the competition. And we know that when consumers are shopping for a financial product, they are comparison shopping. What they're doing, though, once again, if you think about the role of marketing, it's to control the narrative. And so they're able to anchor against a higher rate, and in the mind of the perspective or the member, adjust that accordingly. So there's a great point about relativity here. I want to flip the conversation as we start to wrap up and go from roadblocks to opportunities. I've always been inspired by the stoic and really the strategic stoic wisdom of Marcus Aurelius, who was the emperor of Rome, when he wrote, "The impediment to action advances action. What stands in the way becomes the way." And I think we've heard a lot of examples of that already, and we could dive even deeper into that, because when we look for opportunities for growth, Steve, one of the things that you shared is look for the little wins. Look for the little wins. What are the little wins in your mind right now?
Yeah, so we've seen several little wins, but the one that jumped out to me was, I think I shared, was NPS. So we've been really looking at our Net Promoter Score, even since post-COVID, and we've continued to see it increase and increase and increase. And I think that's something for us to be proud of. And I think it's, from speaking to colleagues in the industry, it's not just us, it's the credit union industry. So I think we've done a really good job as an industry of adapting, changing, and really coming to market and serving our members post-COVID. We had to change, we had to adapt, and I think overall we've done a fairly good job of it. And that's something that we continue to monitor very closely. As some things have been out of our control, as maybe more than not has been out of our control, as we see a change in rate environment, we're just continuing to monitor that NPS and ultimately our member loyalty, and that's been a big win for us. I think another opportunity, we talked, Mark actually from West America talked a little bit yesterday, as other credit unions are tightening up around liquidity, and they're making a conscious decision to maybe get out of lending, there's an opportunity to jump in and be there. A number of credit unions do. They jump in, jump out, and here's an opportunity to pick up some loan to share if you have the available resources to do so. Florida.
That's I think a key theme I'm hearing from you is we must continuously communicate. We must continuously communicate not just what we do, but why we do what we do. Janelle, you were talking about that. You shared that with me. It's like we lean back and communicate why we do what we do to internal teams, but also members, because you said, quote, "That is a job for them. This is a life for us."
Yeah.
What do you mean by that?
I mean, just that. When you look at our competitors and you look at who they serve and how they serve, it's their job. It's not often, I think, they don't have the passion that we do in the credit union industry. I've been fortunate to have stumbled upon Commonwealth 22 years ago in September, and it is life for me. Anyone who knows me well knows that I'm committed to them. I'm committed to my team. I'm committed to the members. And that's, that is a focus. And my family is first and foremost, so I'm not saying that it is above that, but it is a passion for me. And I don't know that we always see that with our competitors. And I think that gives us a strategic advantage because we truly care about the individuals that we serve, both from a team member and a member perspective.
I mean, really, when you were a kid, and I forgot who, it might have been Mark, you said you came from a credit union family yesterday. But when you were a kid, did you ever think that you were going to grow up and work in a credit union? Who did not think that? Who did not think that? Yes, but it's like the mob. Like once you get in, you don't get out, and we're in this thing for life because there's a lot of purpose-driven people. But once again, if we don't continuously communicate that and re-communicate that, not only to our members, but also to others on our team who might be a little bit newer into this journey, we're going to miss opportunities, which, Christopher, one of the things you shared is this idea to communicate, to provide perspective, context around education, because it's not just a rate. I talked about yesterday, trust actually outranks rate in regards to influencing buying decisions. Where's the opportunities you see to educate, to provide perspective?
Well, I think it's everybody's. To Janelle's point, within the credit union space, I'm for life as well, 29 years in. So I started.
He's a lifer.
I'm a life. I got a life sentence. So 29 years and still going. But I think we need to be trusted advisors, and our members rely on us at every level. So think about that. No matter what interaction it is, whether digitally, whether in person, over the phone, we're a trusted advisor. To the point that you were making yesterday, they come to us sometimes with their most dire situation. Maybe they're in peril from a financial situation. And when you can pull those individuals from that peril and bring them back out of it, you've created this passion and this loyalty from the membership. And then that just becomes contagious. So again, that's what I try to communicate with my team each and every day is every decision we make is for our members first and foremost, followed by our employees, and then third by the organization. And if we have that mindset each and every day, that's what guides us. And to me, that's the guiding star, if you will, or the North Star. To Mark's point over at Finalytics, my daughters now are like followers of this credit union cult, if you will. So they've heard the difference between a bank and a credit union. They know what their father does, and now they believe in a credit union difference and what that does. And that's what it is. Each conversation, one by one by one. But then how you present yourself in the communities that you serve is equally, if not more important. So you need to make sure that community-driven insights are there as well, that they're there for the community.
And when you come back and reconnect with why you do what you do, when things get hard, that's your North Star. The why is the North Star beyond some of the pain that we experience right now in the present moment. And Imelda, one of the things that you talked about was you just got to be okay. You got to be okay to move forward, to keep up with the speed of change. That's an opportunity that you see. Continue to learn. Where's the opportunity here?
So, yeah, I think you just have to be willing to change with the speed of everything that's happening around you. It's about how do you embrace that change? What technology are you using? It's just an out-of-the-box thinking process for me to kind of just say we have to move. We have to. We can't look back. It's always looking towards the future. How do we learn from the past and move forward? We just have to be okay with that, instead of staying stagnant.
One of the most challenging pieces of growth is to let go of what you know, to let go of what has gotten you to the point to where you're at today, because that requires you to do a lot of business with yourself. I think we create a lot of attachment into, well, this has worked up to this point, but I don't want to let go of this. Think about the story of Netflix. Netflix was founded in 1997, and obviously we know why they did. What was the pain that they were solving? I mean, remember on Friday nights, you go to Blockbuster, you get that new release, and when would you have to return it? Saturday. So then Netflix comes along, you have this direct-to-DVD delivery model, but then in 2007, so about 10 years after they launched, they upset a lot of people, if you recall, because that's when they went to the streaming platform. So that was iteration number one, but they had to let go of what they knew. iteration number 2, though, who is Netflix today? Are they a streaming platform or are they a production house? They're content. They're a content creation platform. And so they've iterated twice on the business model within a 2-decade period. So I think that's a really important point. Be open to let go of what you know, because Emily, you shared change is hard. Change is hard.
It is hard, but you can also flip the narrative and say, let's look at the opportunity we have to drill down our business. Are we maximizing our partnerships? Are we looking at the fintech partner as more at an enterprise level? Are we looking at it as from a member experience standpoint, a digital experience standpoint, it's just a lending platform? We get so stuck in that, and we get siloed in our different business lines, and it causes us to be inefficient. So that's the opportunity, is to make sure that you're maximizing what you already have in place, look for opportunities to grow through the change, and that takes weight off of your teams too, because when you're running at such high loan production, you're not stopping to say, are we doing this right? You're just a cog in the wheel. So this is the opportunity to say, step back and say, what can we do better? What can we do faster? And are we maximizing those relationships that makes our lives easier?
Yes, and when you talk about creating that intentional space and time to pause, sometimes it's a forcing function, kind of like in the environment we're in right now. But I really believe going forward, the individuals, teams, and organizations who create space and time to cycle through 4 seasons of growth will cultivate success when they not just are focused on what they do, but they take time to review what they've done, learn through the experience, think about how they can do even better to apply that knowledge going forward. If you make that commitment to do it every 90 days, you're really following a nature, the seasons of nature: spring, winter, summer, fall. Not in that order. Spring, summer, fall, winter. Let's come over to you, Joanna. When you look at opportunities, as we wrap up here, what's the big opportunity to send us all out besides everyone should just move to Florida?
Well, I think Emily kind of mentioned it. I think as we keep looking to grow, because we know, loan volume might be slower this year, or, more challenging this year for some than prior years, we've got to look at how we can increase efficiency and automation so that it's not requiring additional staff. But also, a lot of the stuff we've talked about here, what are the fintech relationships you have that can help you grow, without maybe needing your own technology, but help you grow efficiently.
When we talk about efficiency, one of the opportunities that I see there is informed and influenced by the thinking of Izzy Sharp, who founded the Four Seasons Hotel. I mean, a fantastic, hotel experience. But what Izzy taught was there are opportunities to look, even within your organizations, even within your teams, to systematize and automate the predictable so that we can continue to humanize the exceptional. And I think every single one of you here is exceptional. We can take these ideas, take these opportunities back, apply them, and continue to cultivate success together.
As we wrap up today's episode of the Banking on Digital Growth podcast, this panel discussion really reminds us of the significance of the importance for community and collaboration. Building stronger networks by learning from each other, by connecting with each other, is essential for continued growth in this fast-paced, ever-evolving world being fueled by exponential technologies like AI. And it's because of exponential change for many leaders, that exponential change can feel confusing, it can feel frustrating, it can feel complex, it can feel overwhelming. And this is the reason that I wrote Banking on Change for you, to be a leader's guide for you to unlock, to achieve exponential growth in the age of AI. Once again, you can pick up a copy of the book for you and for your team, along with some extra bonuses. Visit www.bankingonchange.com. As always, and until next time, be well, do good, and be the light.